Okay, it's official. The world is crazy and nothing makes sense. Let's jump into today's video. Hey guys, welcome back. So today we're doing a follow-up video on a video that I made earlier, which is there going to be a second stock market crash coming? Now I filmed that video back in, I think, March or April, and that video did relatively well. I'll leave a link to it somewhere, and you guys can go check it out. But essentially, a lot has changed since April, so I'll be making another video updating you guys on what my strategy is for my portfolio going forward, and what do I think of the general, trend of the economy and things like that as a whole. Be sure to check out that video if you haven't already. And now before we begin, let's go through some quarantine memes. I was debating on whether or not to keep this section in today's video just because I don't want to make it seem like I'm making light of the current situation that's going on with all the protests and the stuff. You guys know what's going on in American cities, right? Like, I think there's protests in 12 cities, and some protests have been turning violent, unfortunately. Now, I don't want to seem like I'm making light of this situation, so I was debating on whether or not to include a section about memes, but I decided to leave quarantine memes in today's video just because I think it might be nice to have a bit of a distraction away from all the chaos that's going on in the world right now. I think that we could all use a laugh. But please, guys, if you're going to go out and protest, please try to do so in the safest way possible, and don't forget that the crisis with the Roni situation is still going on, so make sure that you try to social distance. I know it would be kind of hard for you to social distance when you're out there protesting with a bunch of people, but if you are going to go out there, please try to do so safely and try to avoid areas where things might be turning violent with like people throwing bricks and throwing rocks and stuff like that. But yeah, just try to stay as safe as possible. And without further ado, let's jump into some quarantine memes. Hope you guys enjoyed that. Now, without further ado, let's go through some of the content in today's video. Now, if you guys missed the last video that I posted, I'll try to summarize what I said in the last video. Essentially, what I said was all the market, it doesn't make sense that the market is going up like crazy, and I'm keeping cash on the side just in case that the market dips again. And I even kind of predicted that there was going to be a crash, although I kind of look like an idiot right now, right? Because it never ended up happening, and instead of going down and having a correction, the market has just shot up in a straight line. So if you look at the stock chart of the S&P 500 and the Nasdaq, it just looks like it's just shot up in a straight line, and we're just a hair away from where it was before the whole crisis happened back in, say, January or early February. So yeah, my last video probably didn't age that well, at least from what it looks like right now, but I stand by what I said, and I just think that even now, more so, the market it's not making sense, right? All the numbers are just going crazy, and all the valuation metrics are just insane. And I'm not saying that every single stock is overvalued, by the way. Don't get me wrong. There are still deals that you can find in the stock market, but they've become very few and far in between. Now, most stocks, I would say, in the stock market right now are incredibly overvalued if you factor in all the chaos and all the just things that are going on in the world right now. So I'll go through some of the factors that are affecting just sort of the financial world, and you can make a judgment for yourself as to whether or not you agree with me when I say that the market is overvalued. Maybe you disagree with me, right? And you're free to do so. If you disagree, please leave that down in the comments and you say, oh, markets are undervalued right now and I'm pouring all my money into the stock market. I mean, I'd love to hear what you think, but if that's what you think, I really think that you don't have the entire information set, right? So you don't have all the correct data. So if you look at the data, it just, to me, it seems like the market is just ignoring a lot of risk factors. But I'm getting ahead of myself here. Let's go through some of the factors. So number one thing I want to mention is the protests and the riots. So I'm sure you guys heard of what happened in Minneapolis. I'm not sure how much I can talk about it because I don't want YouTube to flag this video as mature content and then suppress this video or demonetize me or anything like that. So I won't talk about the issue itself too much, but you guys know what happened in Minneapolis, right? So because because of that, a lot of people are out there protesting, and unfortunately, some of the protests have been turning rather violent, and people are looting and things like that. And then a lot of governors and even Donald Trump has been saying that they want to deploy the army, and a lot of places have already implemented the National Guard to try and just quell the looters and the rioters and things like that. And even that has negative effects because sometimes the army or the police that are trying to control the situation, sometimes that can turn violent too, as people are arguably, understandably, very mad at the police at the moment all across the country. Given all of that, the stock market has not reacted at all, right? So if you look at what happened during the whole protest once they broke out, if you compare it to a chart of the S&P 500, it's like the stock market is just ignoring all of this protest and all of this stuff. And logically, I think that something like this should affect the stock market, right? Because you got like protests and things like that in 12 cities, and people are like going out and like smashing windows and looting the stores, and all these like small businesses, they've been dying to reopen because of the shutdown and the shelter in place order, and they're recently just allowed to become open now. And then once they open, suddenly they get a brick thrown through their window just because of the protests. And it just, if you're a business owner in one of these cities and if that happened to you, then that absolutely sucks, right? Like, could you imagine being a business owner and being like, oh, I'm finally able to open up and the government's giving me the green light to open up after the shutdown and shelter in place order, and then something like this happens. So yeah, I'm just saying that the stock market has not priced in the negative effects of this protest at all. Like, the market didn't even react as far as I'm aware. Like, the entirety of the market started going up and then is still continue to go up despite all the protests that's going on. So that's number one. And number two is that unemployment is now at record highs, and we haven't seen unemployment like this since the Great Depression. Now, I'm sure you guys have learned in your history textbooks what the Great Depression was back in the 1930s, and we haven't seen unemployment this high since then. If you look at a chart of just unemployment stats in the United States versus just any time in the past, I don't know, 30, 40, 50 years, I'm not sure how far of a chart that I can find, but like you'll see a giant spike in 2020, right? Like, it's just magnitudes ahead of everyone else of every other time. And it's just staggering, right? So back in 2008, this never happened in 2008. We had a big recession back in 2008, and unemployment never hit like levels like these. Like, this is just absolutely insane. And you're telling me, despite of all this, the stock market is still nearing all-time highs? That doesn't make sense, right? And moving on to number three, don't forget, we're still in the middle of a pandemic. Like, the Roni situation has not gone away. I know people are out there protesting these days, and people are just excited to return to normal, and businesses are opening back up, and people are starting to social gather a little bit more, or governors are allowing social gatherings of up to like 5 to 10 people, and it depends on the state, right? But yeah, like, the Roni situation is not over, and the Roni situation does not care about issues like racism or whatever. It's gonna spread if people gather in large numbers. Like, that's just a fact. So if people go out there and congregate in these large masses and they go protesting, then the Roni is going to spread just the way that it usually does when people gather in large numbers, right? So that's just a matter of fact. So I just think that people are not really realizing how like big of an issue this is when we have these large protests in such an inopportune time. And maybe there's a little bit of a risk where these protests could actually spark the second wave of the Roni spreading. So for those of you who have studied history, you know that back in the World War I era with the Spanish flu, you know that the second wave of the Spanish flu was actually a lot worse than the first wave. So if you're comparing this pandemic to the Spanish flu, then you can kind of reasonably predict that if we were to have a second wave, it might be like that, right? I'm not saying it necessarily will be worse than the first wave, but it might even be worse than the first wave. So, if we have a second wave of the Roni situation, then that's going to be a bad time for everyone. And America's already suffered like tremendously from the first wave. And if you're saying that a second wave is coming and it's going to be a lot worse than the first wave, then what's that going to do to the economy, right? Never mind people's lives. I mean, this I'm going to sound really insensitive because I'm talking about like economy and stocks and money. This is a finance channel, so I got to talk about those things. But even if you just think about it from like a moral standpoint, if a second wave hits because of these like protests and people congregating, then a lot of more people are going to die that unnecessarily that didn't have to, right? So yeah, it's just going to be a bad time if a second wave hits. There's no other way around it. I'm sorry, right? So, and the market is not like pricing in the risk of a second wave at all, right? I think, like, as a society here in Canada, both Canada and the United States, and I don't know about other countries, but here in Canada and the United States, I feel like a lot of people are kind of just ignoring the risk of a second wave. And I feel like people have just this false sense of security almost, right? And again, I'm not saying that the second wave will necessarily happen for sure, but that's definitely a risk. And that's a risk that's not being reflected in the stock market right now. So that's point number 3. And point number 4 is that certain companies are going to declare bankruptcy, if not already. So we've seen a lot of big bankruptcies already because of this Roni situation and the economic downturn that it caused. So I'm talking about companies like JCPenney, Neiman Marcus, and Hertz. So Hertz is a car rental company, in case you are not aware, and I'll put up a chart of what their stock looks like, and you can see that they just fell off of a cliff ever since the Roni situation started, and they've never been able to recover since then, and their stock just traded lower and lower per day until they finally had to declare bankruptcy. So looking at that stock chart, I gotta say, it hurts. Okay, I'll get out. And finally, don't forget that America is still locked in a trade war with China. So I know back in the day, back in like 2019, which was such a long time ago, Trump signed this deal with China for phase 1 of the trade agreement. And a lot of people were super excited about that. And the stock market just kind of roared higher when they signed that deal. But now it looks like that the tensions are heating back up and the countries are just going at each other again. And essentially what has already been done, all the trade agreement that's already been done, is kind of out the window right now just because of all the chaos. And these two countries really don't see eye to eye if they ever saw eye to eye at all. I'm not saying that they saw eye to eye before, but if you thought that it was sort of a difficult situation back then with the trade war in China, well, now it's even worse. The trade war has only escalated ever since they signed that deal. And then I don't think that phase 2 is ever going to get done if phase 1 is being rolled back right now as we speak, right? So, when will we get a trade agreement with China? Like, it's looking like that's not going to happen anytime soon. And we're going in the wrong direction, right? We're going in the other direction of escalating trade tensions with China rather than easing trade tensions. And if you look at a chart of the S&P 500, of course, you'll never see an indication of any like trade tensions or anything like that. Psh, like the market is just brushing that off like it's nothing, right? So I think that all those factors, all those 5 things that I mentioned earlier, they're really big risk factors. And it just doesn't make sense that the market is like I know I keep repeating myself that it doesn't make sense, but it literally it doesn't make sense, right? That the market is so high right now. It's like, I don't know. Like, people keep on asking me, Andy, why do you think that the market is going up day after day when all these like things are happening, right? And I just say, like, God knows, who knows, right? I don't know. What am I, a finance expert? And I know right now you're dying in your seat and you're thinking, like, but Andy, you didn't mention the Fed. Like, the Fed is printing money. That's why the market is going up. The Fed is printing money and they're injecting billions and billions of dollars of cash into the market and they're propping up the stock market. And yes, I do agree with that. And I do see that the Fed has a really powerful tool at their disposal, which is the infinite money printer. So Jerome Powell has been printing money and injecting the stock market with just steroids. And that's probably the reason why the market has been roaring to new heights. But in my opinion, the Fed can't save the market, right? The Fed can't single-handedly save the economy. And the reason why I'm saying that is that a lot of people are still scared to go outside, especially with these like protests that's going on. And never mind the protests, but just the Roni situation as a whole still has a lot of people scared to go outside. And the Fed can print as much money as they want to, but what they can do is get you to spend money. So the Fed can just give everybody money and give everybody everybody's stimulus checks and just buy as much bonds as they can and just buy corporate debt and buy just corporate stock even. Like they can buy as much things as they want to and expand their balance sheet. But what they ultimately can't do is convince you to spend money and go outside and go to vacation or go to traveling or go to the movie theater once that opens up or go to a restaurant. They can't convince you to do that if you're scared, and they can't convince anybody to do that if they don't want to. So I think that because of that reason, the Fed can't just prop up the economy. So if people don't spend, then that's not going to be a good thing for the economy as a whole in the end. And the economy depends on people spending, right? Because as we talked about multiple times on this channel, one person's spending is another person's income. So if you stop spending, then somebody else earns less money, and then they stop spending as much money as they used to or as they would, and then the whole cycle continues. So yeah, at the end of the day, that is the main issue, and I just don't think that the Fed can just single-handedly fix that. I'm sorry, right? So I know that the money printer is really powerful, but I just don't think that that's a proper long-term solution to our economic woes. Now, don't get me wrong, I'm not a doomsday conspiracy theorist or anything. You guys know I'm always bullish on the market in the long term. But right now, in the short term, I just see too many risks for me to be deploying assets into the stock market right now. So that's why right now I'm continuously collecting cash and saving it on the side and waiting for a stock market correction. Now, I know a lot of you are like, you left so much money on the table for the past 2 months when the stock market has been going up continuously and you've just been keeping money on the side and not doing anything with it. And yeah, I realize that I did leave a lot of money on the table, but in the long term, I just think that it's a lot better for you as a strategist, as a stock picker, to just keep the money on the side when the market is overvalued and deploy assets when you think that something is undervalued. Now, I still buy stocks when I see undervalued deals, right? So I know the RioCan video did really well. So I've been buying a lot of RioCan lately just because I think that they haven't bounced back that much since their lows back in March. And I think that is a great idea to kind of just diversify my portfolio a bit by buying some real estate. So I've been buying RioCan, I've been buying just stocks here and there that I see are relatively undervalued still. But man, guys, like the undervalued, the deals are getting fewer and fewer, and I'm just not seeing any major deals, right? So I would love to pick up some shares of, let's say, Microsoft that I talked about earlier, right? I love to pick up more Microsoft. I love to pick up more Tesla. I love to buy more Facebook. I love to buy all these like big brand name stocks, but I can't, right? Because I think that most of it is just super overvalued. So yeah, I'll be continuously keeping money on the side and just waiting. And I think in the long term, that's a better strategy. And I think as an investor, that's what you should do, right? Keep money on the side when things stop making sense, and then deploy when things start to make sense again. Like if you were to tell me back in February that of all these things that I just mentioned that was going to happen, and you guys were to ask me, I give you all this information, what do you think that the stock market is going to be relative to February? Do you think that it's going to be relatively the same, much higher or much lower? And if I didn't have any other information, if you guys just told me of all the 5 things that I just mentioned earlier in this video, and you guys were to ask me how does it compare back to February before all this unfolded, I would guess that it's much, much lower, right? But clearly I'm wrong, and clearly that's not what the market is reflecting. So I don't know, I just think that the market is just not making sense right now. Now, with that being said, should you short the market? And to that, I have to say the same thing that I just basically said in the last video, which is I don't think that you should necessarily short the market either. Now, if you go on Wall Street Bets, a lot of people have been posting their loss porn on their SPY puts, right? So a lot of people, they're either shorting the market, or the more common way is just to buy put options on an S&P 500 index fund like SPY. So they've been buying SPY puts, and their SPY puts are just down like 99% all the time, right? Just because the market's been roaring higher. So that's definitely a risk that you are taking on if you buy put options or if you short the market, because the market could always run higher, right? So, as a famous investor once said, the market can stay irrational for longer than you can stay liquid. What that means is that the market can just keep roaring higher and could just keep continuously not making sense and until you run out of money, right? And then once it does correct, then you've wasted all your money on SPY puts and you've lost it all. So you have no opportunity to buy back in or to just make money because you lost your portfolio already, right? So yeah, for those reasons, I don't think that you should necessarily be shorting the market or loading up on put options because it could always roar higher. So as I speak, the Dow, S&P 500, and the Nasdaq futures are all green. So maybe it looks like there's another green day in the coming for tomorrow, right? So yeah, the market can stay irrational for a really long time, and you really don't know. And it's really dangerous to be shorting this market too. But yeah, in summary, my strategy has not really changed since last time. I'm still keeping cash on the side and I'm still sort of just looking for opportunities for investing. And if I don't see any opportunities, then I'll be more than happy to just keep everything in cash. So anyways, I'll leave the video here because it's getting a little long. Be sure to hit the like button if you enjoyed the video and consider subscribing if you like this series. Be sure to follow me on Twitter and Instagram. I'll leave the links down below in the description as always. And with that being said, I'll see you guys in the next video. Bye-bye.